Hey everybody, what you've been waiting for all week long is Wall Street Winners. Hey everybody, Courtney Smith here for our November 16th edition of Wall Street Winners. Now, we started this thing 25 years ago, and here we are still going strong, stronger than ever. All right, and this disclaimer it never gets old. It never gets old. Okay, we've got this giant rectangle formation, and we broke through on Monday, but then we came right back down again. But generally speaking, when there's not that many fake out breakouts. Usually they are premature breakouts. And I think that's the case now. Friday's price action was pretty good and tells me that we're going to probably move higher through the rectangle high. In addition, Purple Predictor is making new all-time highs here late in the week, showing that the smart money is buying this breakout. Over here, we see the little green line is way above the little red line, showing that there's a lot more buying pressure than selling pressure. And then the black line confirms we're in a bull market. And of course, if we're in a bull market, you got to be a buyer. NASDAQ not looking quite as good. We had the big spike-o-rama on Monday, but it's just not as strong as the other indices because right now we're completely focused on economically sensitive areas. I think that people are selling their tech stocks and buying old stocks, financial stocks, utility stocks, things that are interest rate and economically sensitive. Seasonality, both bullish, both the stock market and the utilities are bullish. And so what that means is we need to have double size or at least 50% larger positions on right now. Hey, make hay while the sun is shining. And right now, seasonally, the sun is shining. In addition, take a look at this from a Stock Trader's Almanac. You can see you should always be looking at the green line. This is a pretty good period here. Interestingly enough, on the blue and the red line, it's even more bullish. But with the green line, which is really what we're at, it's flat to bullish, get a little dip early in December, and then take off at the end of the year. Asset allocation stumbled a little bit this week. No big deal, but generally speaking, people are reaching for stocks. Now, part of the reason they're reaching for stocks is because there's no yield. So they're buying utility stocks. They're buying financial stocks. They're buying stocks with high dividends. You got it? High dividends. Our stock market risk indicator kind of came down, which tells me, once again, they're getting out of high tech. They don't want risky stocks. They want less risky stocks, but they want a lot of them. They want dividend payments. They want interest rate sensitive stocks. And so that's where you need to be concentrating. The last year, 2 years, we've been concentrating on tech stocks. Now we need to concentrate on old economy stocks. Global shares, Papa-rama, look at that thing, woo-wee. Yield curve slowly creeping up. Looks like the Fed is letting it rise up to the level that it should be. If we had a free market, this would probably be closer to 200 basis points instead of 80. But we don't have a free market in interest rates anymore. But the Fed is allowing the yield curve to get more and more positive. And that means that we're getting more bullish on the yield curve. Still not really wildly bullish, but better. Bonds got a little pop on Thursday, but still remain in a sluggish bull market. Not even sluggish. Let's call it sloppy choppy. I'm short, not loving it. Bond key factors all say that interest rates should move higher. All of them say move higher. The only thing holding interest rates down is the Fed. The dollar stabilized a bit here after showing quite a bit of weakness, particularly against the yen, but is now stabilizing. That means gold is stable too. I got pretty bullish and started to put in some orders to buy gold, but never really bought much, a little teeny bit. Why? Because it then plunged. Okay, so we broke some highs. I started to get long. I had a lot of orders in, but they didn't get filled. I still think that's probably the right strategy, even though we made a lower low. We made a higher high and a lower low. That means we're in a neutral market. But if we can break the high that we made around 1960, I'm definitely going to want to get long again, get more aggressive. Our gold key indicators are basically bullish. Maybe one is bullish to neutral, the one up at the top, but the other ones are clearly bullish. And fully paid up members, our other indicator is bullish as well. So we want to be long gold, but only on strength. I don't want to buy it down here. But Courtney, it's on sale. It's on special. We can buy it now at $18.80 instead of $19.60. That's $80 cheaper. Yeah, but it's not a bull market, which means that you're fighting the market, which means you're going to lose. We only go with the market, and that means we buy strength, not weakness, because we don't fight the market. We let the market just carry us on a gigantic, we just surf that gigantic tsunami of the market, and man, do we move fast and far. But if you're fighting the market, all you are is beating your head against a wall. Life's too short for that. Okay, crude oil, I said we'd probably get up to $40. You can see we had some pretty powerful strength there, and then it sagged back down to $40. I think we're going to stay in this range right now. Supply and demand are basically in line with each other. We have weak demand and weak supply. But net, at this $40 level, it's an interesting thing, because at this level, the Middle East suppliers like Saudi Arabia, the UAE, they're all making money. Russians, they're making a little bit of money. The American frackers, not making money. So they've kind of hit the price where OPEC gets the biggest market share. They don't have to compete against the Americans. If they got it back up to $60, then the Americans would come in and flood the market. So this is it. The high there at about 44, that's the high, I think, for the next many months. Bitcoin continues to move higher. Purple predictor getting more and more bullish all the time. So this looks pretty good. 16,000. We're up around 16,000 right now. We told you we were getting bullish down around 10,000, and we told you to buy it if it broke up above about 12,000. Now, I personally did not buy it. I always want you to know what I'm doing in the real world. So I hope you did what I said to do, not what I did. All right, freebies. Love having you here. Let's go make some more money this week. This is fantastic. Fully paid up members, hold on for just a second. Hey, freebies for Wall Street Winners. Really appreciate having you here and love to have you participate in the Wall Street Winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature. That's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.